Hello and thank you for joining our webinar today. My name is Darryl L. Houston. I'm with Darryl L. Houston CPA PLLC firm. And today we're going to talk about something that everybody should know, business, federal, state, and local taxes and ways to avoid late penalties and any type of surety bonds. So let's get started. First, I would like to begin with a disclaimer. This is a presentational for education purposes only. It's not intended to be providing type of legal, tax, or accounting advice. It's still recommended that you contact a professional advisor for any of your specific situations. And let's begin with our agenda. First, I'll talk a little bit about myself and what makes me a great person to talk about this type of subject. And we can go into our state and local taxes, some of the different types, any type of federal business taxes, and some modern business accounting solutions. So let's begin. A little bit myself. My name is Darryl L. Houston. I am the managing member of Darryl L. Houston CPA PLLC. I've worked at the nation's #1 and #5 public accounting firms. Started my career with Deloitte Tax LLP and just left RSM in Austin, Texas. I'm currently now starting my own firm, and I was asked to provide some information on some of the business tax needs for small businesses here in Killeen, Texas. I also am a former committee member for the Pflugerville Finance and Budget Committee, as well as am currently sitting on the Tax Increment Reinvestment Zone Board for the city of Pflugerville. So that's a little bit about myself. Let's jump into some of the state and local tax needs. So, in the state of Texas, there's two types of taxes that businesses are required to file. There are your sales and use tax and your franchise tax. Typically, most businesses won't usually have an actual payment for franchise tax, as there usually is a generous type of gross receipts you must first have, but it's still worth noting. But let's focus our attention on the sales and use tax. So basically the sales tax is this. Sales tax is considered a pass-through tax, meaning that the tax that's imposed on it is only about 6.25% required for the state of Texas, and usually any type of local jurisdiction can have a sales tax rate of up to 2%. But in general, you can expect to pay about 8.25% for any earnings that you have. What does that mean? Well, for example, let's say we have a dress that we're selling for $100. If you were to basically ring that dress up for a person, they would not be paying $100, they'd be paying $108.25. That $8.25 needs to be sent to the IRS at a usually rate, usually quarterly, semi-annually, or annual. The importance, the first, is to actually register yourself with the state, and you're going to need a couple of various options that are located here on this slide. Once all of those items are attributed, you can actually file your registration. It can be done either in paper or online, and you can get started with the filing requirements. It's very important to do this as the penalties for not doing it are steep, and I can share them with you now. To begin, any penalty and interest is usually calculated on an amount of time that is done. Now, they usually give you about a 10-day grace period, but after that, you start incurring a penalty of about 5% of the sales tax owed. After 30 days to 60 days, it can increase to 10%, and then anything over 60% becomes a penalty of 10% plus any interest owed. It's also worth noting that if they determine that you are a possible liability of following through with your obligation, they can remit surety bond for any estimated taxes in the future, which can cost quite severely. So it's very important that you remit these sales taxes when you're incurred for any type of sales that you may earn. The other item is your franchise taxes. Franchise taxes are required for any type of business that has incorporated. So if you were to create like an LLC, then this type of taxes is due. It is considered basically a privilege tax, meaning that they're giving you the privilege of actually doing business in the state of Texas. This can also be for any type of entities that have not been established in Texas but are operating as business in Texas. So it's very important to have your filings for your franchise tax during that time. The filing date for the franchise tax is due on May 15th of each year. Now, even though well, as I stated before, the franchise taxes usually a lot of small businesses won't incur because the state of Texas has quite a generous no tax due threshold. Although you're still required to file, the taxes won't start kicking in until you actually have gross receipts of usually about 1.1 million. As of this date, it's 1,180,000 as of 2020. And the tax rate on that type of earnings is usually for any type of retail or wholesale 0.375%. Any other taxes besides retail or wholesale would be 0.75%. And you're also allowed to take compensation deduction for that limit, which is $390,000. So as you can see, for the majority of small business owners not meeting those thresholds, usually the one that most small businesses should focus on is your sales and use tax, and you don't really have to worry that much on the franchise tax until you meet those thresholds. However, if you are incorporated, you are required to file that franchise tax report even if no tax is due. Moving on. So federal business taxes. The great part about it is, for me, sole proprietorships, which are basically self-employed businesses that haven't incorporated or anything, you don't really have to worry about an income tax as far as for the state level. However, the federal business tax is still required. But it's very important to note that your business structure, depending on how you establish your business, is not only important for legal liability purposes, but also for the amount of taxes you pay. What do I mean by that? Let me give you a chart real quick to give you a little bit more detail on that example. So here we have an after-tax income of $200,000, and some of these are, of course, their facts and circumstances can be severe, but let's say for a high-earning individual, how much money can they basically receive if they're basically set up for a certain structure? We have our LLC, our S Corp and C Corps, and C Corps with zero dividends. Notice that the highest earnings is C Corps zero dividends that are basically taken out of the business. They have the highest amount of money that they can keep after filing their taxes. S Corps and LLCs, not as much. And the lowest one is actually a C Corp with 100% dividends. That's because of the idea of what we call double taxation, meaning that you're going to be taxed twice on your earnings. But this is a very good understanding to show that depending on whatever business structure you choose to be for your business will affect on how much income you received after. Now, how can we lower our expenses for federal business income taxes? Well, it all comes down to your expenses. Your expenses basically reduce the amount of net income that you earn, and it's not good to say that basically thinking of it as a write-off, because I mean it is a write-off. However, you still have to pay those expenses, but at the end of the day, your expenses, your revenue less your expenses is what gets down to your net income, which is the only amount you actually pay to the government. So how can you keep track of your expenses? It's very, very important, and it comes down to having good records and good record keeping. Bookkeeping can help with this matter because it can start to create what we call like financial statements, like your financials that can be used to prepare your tax return, or if you need additional assistance or work, it can also be used for planning and managerial type of accounting. So record keeping and those practices are important. For the IRS, they usually recommend that you do about 6 years to hold information for it. I always recommend 7 years just because that extra year, just in case there's some important information. And it's also important to keep track of all of your resources, your receipts, invoices, deposit slips, bank statements, and any other type of items. It's also great, obviously, to keep these items in a protected area. Now, in the world we live in today, everything is electronic, and I actually encourage electronic transmission of files. Just make sure that you have proper and robust backup procedures, whether it be done through a server or if it's done basically at home. Moving on to our modern accounting solutions. It is very important to understand that in today's world, a lot of the bookkeeping and work was very slow paced because it was keeping track of different paper files and things, and it can become quite cumbersome at times. But with the modern accounting solutions, now it makes life a lot easier for you to understand not only your financials, but also the type of reporting that you're required to do. Now, every single solution when it comes to modern accounting will cost, but it's a very necessary business expense, because without very good financial statements, you won't know your requirements for your business, federal, state, or local taxes. So I highly recommend do not skimp on your accounting software needs. Now, so I know I talked a lot about business, federal, state, and local taxes and requirements, but let's talk about current events going on right now. As you know, COVID-19 is changing a lot of things right now in America, and it's affecting a lot of small businesses. So what can you do for your business federal tax needs right now? As we just stated, the IRS has stated that they will now delay payment of all federal taxes until July 15th, 2020. That it does not give you basically an extension to file your taxes. However, by law, everyone is allowed a 6-month extension. So as long as you file a 6-month extension, you will have for 6 months to be able to file your taxes, and July 15th, 2020 to actually pay the taxes. So that's very important if right now, you're just working and you're trying to just figure out what's the best thing to do for you and your family during this pandemic. You shouldn't have to worry about your taxes as long as you file your extension in time. The payment will be required by July 15th, as I stated before, and the actual tax return will have an extension time of October 15th, 2020 if you're an individual, or 9/15/2020 if you're a pass-through entity like a partnership or a S corporation. If for any other further questions or regards, please contact me with my contact information listed below. Thank you.